Good afternoon. Good afternoon, everyone. Welcome to Lunch and Learn at the Cove. Thank you all for being here today. I'm Grace Hahn. I'm the Director of Development here at UCI Applied Innovation, and I would like to introduce today's speaker. Scott Hamilton is CEO of Executive Next Practices Institute, or ENP, a large C-suite research and forum organization that is one of our wonderful ecosystem partners located here at the Cove. He is also CEO of NextWorks Strategy, that was recently nominated as an Innovator of the Year in 2018 by the Orange County Business Journal. Congratulations, Scott. NextWorks is an advisor of strategy development, alignment, talent management, board effectiveness, and executive performance programs to middle market companies. In today's talk, Scott will share the 5 critical elements of new scalability and leap growth, from the initial business design to strategic execution. Please join me in welcoming Scott.
Okay, thanks, Grace. Thank you so much. Thanks, Grace. Glad to hear you. Good afternoon, everybody. How are you? One more time, good afternoon. Get the blood stimulated, all right? All right. Glad you can make it. How many of you have been to a Lunch and Learn before here at the Cove? You're saying? Okay, most of you. But I do want to, for the new people that have been in the room, I do want to share a couple of things with you. So those in the back, way in the back, come on down and get a seat, because this is going to be definitely highly interactive session today. It's not going to be a talking head. I'm certainly not going to talk the whole time. I'm glad you're here, and the timing for you to be here is perfect. We are in an outstanding economy. I've just come out of 4 or 5 investor conferences. We just had a great economic forecast by Jerry Brackman, the CFO of First American, yesterday at our event. All the news in the economy is good. Payroll news this morning was fantastic. You're in a great economy. So what does that mean for us? That means if you're looking to scale your business, there's no better time than right now. Now is the time to make hay and get out there. There are no constraints on you to move forward now. But with that, you ever notice that when there's an earthquake or about to be an earthquake, that your dog or your cat starts acting a little strangely? So my advice to you is make hay, but keep your eye on your pets. You never know what's going to happen next, all right? So with that, scale, Lunch and Learn objectives. I'm going to go through this. On behalf of Haley Young, who runs this program, I thought I'd just share this with you because our objectives are pretty simple. One is to bring people in the room so you can make collisions with each other to drive new opportunities and potential new business opportunities and new authentic connections. Number 2, you're here at the Lunch and Learn to network, obviously. Number 3, obviously also to learn about the Cove. Number 3, we try to give you some content learning that will help you on your entrepreneurial journey. Now, the subject of scale, here's a caveat for you about when we talk about scale today. This is a huge topic. We've got a lot of different businesses in the room, a lot of different players. Some of you are very experienced, some are just starting out. So when we talk about scale, this is a huge ocean, and we're not going to try to boil it today. We're not going to get too deep in some of the financials, although we have experts in the room who can probably share that. We're not going to drill too deep in some of the marketing aspects because that's been covered in recent Lunch and Learns, and we want you to come back to examine some of the other elements that will help you. But I'm going to focus on the techniques of scale that will help you get started and, more importantly, disrupt your business so you can scale at an even faster rate. So that's what we're going to talk about. Your objective today, your obligation, is to ask questions. So we got mics on either side. You can stop me at any time, raise your hand. We have experts in residence here at the Cove. Grace, how many EIRs we got now? 330? Something like that. We got experts in residence here. If you're an EIR here, raise your hand if you got a specific case example of scale that you want to share. So as we go through that, that's your obligation. All right, so with that, Grace mentioned we're part of Executive Next Practice Institute. We're based here at the Cove. We're a community partner to the Cove. We've been around for 10 years. We've put north of 30,000 people through our forums. We just had one yesterday on cybersecurity. We've had almost 1,000 speakers walk through our doors. And we're pleased to be part of the ecosystem here at the Cove We're primarily middle to large market enterprise companies that get together to look at emerging trends. And we're here to introduce the larger enterprises to the startups here and potentially look at IP, technology scale, adoption, and partnering with you. So get to know us. We have, like I said, a meeting every couple of weeks. We do run a strategy company also that's involved with taking equity positions, but also helping companies with their strategy, their leadership, customer centricity, and other elements like that. We were pleased to be nominated as Innovator of the Year. Okay, what do we hear about? Uberization. This is the constant mantra that we're all under right now, digital transformation. Companies being Uberized left and right, doesn't matter what sector, what space, something's being taken over, Netflix, Blockbuster, et cetera, et cetera. We all know that story. So with that, as we look at scale, what we're going to ask you to do is look at potentially a next practice strategy for your company. And I don't mean a strategy or next practices for somebody else's company or best practices for you, but what are specific processes, techniques you can use as you're scaling that are unique to your organization, the next practice. So what I'm telling you, benchmarking is out the door, best practicing is out the door. You have to look at something that's going to be relevant for your specific model, which, by the way, is exactly the opposite of what we were all taught in B school. You know, when we went to graduate work, we were told nobody is unique. That's exactly the wrong thinking. All right, so let's keep going. As I mentioned, I'm going to invite you to our next meeting, which is pharmacy. Look at the pharmaceutical sector. That's in this room next Tuesday morning. Ruben's in the back. MJ's here that can help you with getting settled for that. Since you are here at the Lunch and Learn, the code for these two events is Cove VIP. Cove VIP, that takes 20% off. We look forward to seeing you at both of these events. All right. So I need to know who's in the room with us. Who has revenues of more than $1 billion? Raise your hand. You got more than $1 billion in revenue. Okay, they didn't come today. You've got revenues of more than $300 million. Okay, they didn't show up either today. You've got revenues of more than $10 million. Raise your hand. Okay, we got one in the back. Two. We got two here. Excellent. Congratulations. So I'm going to presume that the rest of you have below 10 million, or you're just here to have the pizza. Is that a fair assumption? Okay, good. All right. Second, who's here by industry sector? Number one, healthcare. Okay, we got about a quarter of the room healthcare. Second, hospitality. Hospitality, food, includes food service. Welcome. Professional services, meaning consulting. How many we got of those? Okay, got it. Great, another third of the room. I want to be sure to address all of you. Transportation. Good, a couple of transportation folks. Technology. Okay, most of the room. Spoiler alert, all of us should be about technology because there's an element of technology that's part of all our business models. So in fact, we are all in technology. Okay, I'm going to turn it to you. What's your definition of scale? Since we're going to talk about this ocean of scale, what is your definition? Stacy, what's your definition of scale since you're sitting down front?
Being able to grow and build your company, to manage the opportunities that are presented to you in a way where you can bring in new staff and you can bring in new resources to meet those demands.
Okay, so to boil that down, meeting demand of the market. That's a good summary of it. What about, who else has got a definition of scale? What do you use this? Yes, sir.
Two keywords. One is the size of our company. Another one is our influence to the world.
Your influence to the world. Excellent. That's great. Anybody else? Definition? Yeah, Chris?
Effective controlled growth.
Effective controlled growth. Outstanding. Another definition? Come on, give me one more in the back. Yes, sir.
Flying as high as possible with as little drag as possible.
Little drag. I like that word drag. We're going to talk about friction in a minute. Great word. Here's our spoiler alert. The BFO of today. BFO is blinding flash of the obvious, by the way. Digital transformation has changed the entire approach to scale. It's changed the velocity. It's changed the adoption rate. It's changed the return on investment by a multiple of 10 or more. Digital transformation is doing that. However, here's my caution to you. If you are not leveraging technology correctly, if you're not looking at technology that integrates, if you're not looking at applications that integrate and scale with you, then you're back to analog speed. You're back to analog speed. And there's a couple of key words in there: technology that integrates, applications that scale with you. So CRM, customer relations management. If you've got an existing CRM that works now when you're at $1 million but won't work when you're at $500 million, you've got a problem. We're working with a local accounting firm. I won't mention them, but they're very fast growing. They are now in their 20th year of growth, solid growth, and they're also trapped with no less than 20 legacy systems that they're trying to integrate. So most of you in technology know that they're trying to bolt on workarounds, anything they can do. Start early. So there's your spoiler alert. All right. Just a few key elements of scale. Number one, are we operating the business at scale? So in this case, it's about optimization, not duplication. Can we optimize our business? Second, are we taking advantage of the size of our business? So there are not a lot of big companies in here, but once you reach a certain size, you can demand things of the market. You can determine your own terms with your providers and your suppliers. You can negotiate better terms. So scale, size gets us that. Can we up and downscale? So Amazon Web Services, they can take you up or down the scale as you work with them. Now, we're in a booming economy, but you need to be thinking about scaling down as well. Is your infrastructure and your people and your model, can it go up or can it go down? Does it scale well at all? Now, here's an important point we're going to talk a little bit about. If the operating costs increase at the same rate as revenue growth, the business does not scale. You're in professional services. Now, we've got a few consultants in the room, and this is the consultant's dilemma: sales versus fulfillment. See if this sounds familiar. You're a professional consultant, you start to get a couple of clients, your sales and marketing effort drops to next to nothing. Have you heard that story before? Because it doesn't scale well. The individual consulting contract, there's only so many contracts I could handle as an individual person. I can't, if I'm not leveraging the technology, I've still got that one-to-one relationship with clients. It doesn't scale. I come across hundreds of consultants every year that come through our programs. So we're trying to help them quickly get their IP and their knowledge into a way that they can digitize their services to market. The faster they do that, the better they can scale. But many of them are stuck in the same place. I'll take one quick story. I thought I had a deck. I might have left it out. Ken Blanchard, 1 Minute Manager. Who has read that or remember that book? It's been around for decades. It's now in its 19th printing. Ken Blanchard had a partner, a business partner in San Diego 30 years ago. They started out with individual consulting, working with clients, working on their leadership. Ken and his partner. Ken said to himself one day, said, this is no longer going to work. I'm running myself ragged. We're not making any money. We're not even at a $1 million in revenues. And yet, we've got clients that rave about us. Ken went out and wrote the 1 Minute Manager. Now, some of you remember this story. The 1 Minute Manager was an instant, overnight success nationwide. Nationwide. His business partner said, that's not a business I want to be in. I'm exiting. Fast forward to today, Ken Blanchard has his institute. He's on the 19th printing of his book. He's got workshops. He's got other kind of models that are working for him, delivering a recurring revenue stream. He's been able to scale. His business partner, same place. He's in Carlsbad doing the same one-to-one consulting. I'm not saying that's wrong. I'm just saying it's what you choose to do with your consulting. So, does it scale? How fast can you scale? Once you get traction, have you built sales models that will allow you to replicate and engage with the customer on a continuous basis? So you got a sales model that you continue to talk to people that work well, the process can be duplicated, and scale the business quickly in terms of sales. So those are the different elements of scales we're going to look at. Where do you start? Let me throw all these up at once here. The value proposition that you have is the fundamental area you want to start with. What is your value that you're offering the market? I know that sounds like another BFO, but most people miss that. They start talking about benefits and features and all that. They miss the fact that it's the value proposition that takes you forward in the marketplace. Second, differentiated market strategy. Key word here, differentiated, not somebody else's market strategy. Flawless execution, having the money to feed the engine, and finally, the ability to persevere and make it through. In other words, scale up or stall out. And we've seen a lot of companies stall out. So let's start looking at it this way. If we're going to get to exponential growth, we need to take a look at strategic pivots along the way that will change that value proposition. And then secondly, measure ourselves for success so we have early warning signals when our value proposition is working and when it's not. And then finally, keep the scale mindset going, not only among ourselves, but among our teams. So let's drill into this just a little bit. This is a scale map. This is a derivative of the business model mapping some of you may have seen in different forms and shapes. We've taken it and pushed it into a velocity, what we call a velocity model. So here is the way that you can scale your business. Now, I want you to look at this closely. When we talk to a lot of startups, and I'm not picking on engineers, but the first thing engineers will say, our business is in this quadrant right here, key activities. That's what we're all about. Or they'll start talking about the fact that we have these customer relationships. That's what we're all about. If you're going to scale, you have to start in the very middle. That is, what is the true value that you're providing? And then all these elements have to come together in sync, supported by infrastructure to make it work. Now, for the sake of today, this is actually a 3-day workshop we do on scaling, but I'm going to take a couple of these elements and walk you through it. But again, stop me at any point if you got a question or you got a comment, or if you're an expert in residence, I need an example from you. All right. So looking at the value proposition. Number one is creating a value. Secondly, features. Third, benefits. We had a lunch and learn here, I guess 3 or 4 weeks ago, Grace, where we talked about that. We got into the details of this. It's this sequence, not any other way. When you're talking to a customer, it's about the value to them, not the features and benefits. That's where we start. Number two, we've got an opportunity here. Jeff Bezos talks about the fact that the consumer market, because of digitization, has changed. So the customer wants more customization. They want a great product and great service. They don't want marketing. They're inundated with marketing. And yet, again, going back to the scale map here, when we talk to a lot of companies, they keep talking about marketing channels and other elements of the marketing. And they're putting way too much money, time, and resources into that sphere. Whereas they need to be talking to the customer and saying, what is the true value to them? And that will scale. All right. Oh, by the way, let's back up a second. One other quote from Jeff. Your margin is my opportunity. Looking at businesses that have a high margin and going after those businesses, knowing he can undercut them. That's been his whole mantra as well. That's why Amazon has done so well in different retail markets. All right. Starting with your customer and market strategy. Let's look at that. Here are the ways you can grow and grow your value proposition. Number one, the highest disruptive play you can make is to offer a breakthrough solution in an existing industry. It's got an existing problem. You offer something fresh and new to the marketplace. By the way, on all three of these I'm going to talk about, you don't always have to be disruptive to make a scale model, by the way. You can come in with a new type of food product in an existing industry, a new type of play there, new type of hospitality offering, new type of transportation offering, scale it, do well. I'm not saying you have to always be disruptive in your space. However, your greatest likelihood of getting early adoption and real scale is breaking through in an existing industry. And that's number one. Number two is redefining an industry problem. We'll talk about some of those. Number three is identifying a brand new solution, brand new solution to an existing problem. That is, take the example of ringtones, which has grown into a multi-million-dollar business out of nothing, selling that through apps. So, existing business. Does it add value to anything? Not really, but it created a new product that could be scaled for your ringtones. All right. If you're an existing business, I'm going to throw all these up here in the interest of time. We can always go back to these. If you are an existing business, here are some things you could do. Art, you've got 2 million, you've got 5 million in revenue, 20 million in revenue. Here's the way you can look at your markets, grow your value proposition. Look at alternative industries. Number 2, look at strategic groups across your industry. 3, rethink the functional, emotional orientation of your industry. In other words, how is the buyer behavior changing in an industry, and how do you tap into that to leverage it? I'll give you an example of that in just a minute. So if you're existing business, you've got quite a few opportunities to refine and hone your value proposition to grow. Everybody with me so far? Okay. So we got startups, we got existing businesses. So our advice to you, and this is a little bit of a play off of Jeff Bezos' mentality and philosophy, is look at businesses that haven't been able to scale or haven't been able to scale well and go after that space. And there are a lot of them out there. Bezos says, look at what's not changing, go after that industry. We're saying, look at what has not been scaled, do it. Or if somebody's not scaling it well, go after that. Those are your opportunities. So if we look at this, somebody mentioned drag earlier. I love that word. When you're looking at something, if you're going to scale it, the first thing you need to consider is how much friction you have between you and the customer. In other words, how difficult is it for them to acquire your service, to opt in, to buy your service, to go through the machination of being a customer? The lower the friction, the faster the adoption rate that you will see. How many of you are in software now where you're relying on viral or other techniques? Yeah. So tell me, what do you, those of you in this space now, what are you relying on and what are you doing about friction? You got an example for us in terms of making it easy? Do we have a mic? Just grab a mic here, Phil, please.
We're having friction with bringing people on individually, like mom and pop shops. And so what we did was pivoted to make it so we are having strategic partnerships with larger players so we could adjust the software for one person and then they could push it out to everybody.
Yeah, that's excellent. Yeah, we're going to talk about strategic partners in a minute, but that's a great technique of getting yourself more bandwidth and lowering that resistance. Who else? What else are you doing about lowering friction, making it easy for the customer to buy your service, to get on board? Who else is working on this issue? Yes, sir. What?
Giving a free trial.
Free trial? Yeah. Yeah, the free trial has always been a tried and true way of getting that early adoption, getting them on board, and then building it from there. Many of you, how many of you are relying on viral type efforts to get adoption? In other words, existing customers bringing on new customers. Okay, we've got a couple of those. That's one path forward too. It's not always the fastest path. But again, the more you can do on this particular item in terms of lowering that friction, again, you get that speed of adoption and it keeps going. Here's the most widely known example. Been to a car dealership lately, a used car dealership lately? Talk about the most painful experience in the world of trying to get to be a customer. They do everything but push you off the lot. And this is an extreme example, but that's what we're seeing across a lot of businesses. You're coming across like a used car lot. What can you do to be more like a Tesla that's welcoming? By the way, I'm not saying Tesla is perfect. They've got a lot of problems. They got a lot of problems. But on this particular side, in terms of ease of use for the consumer to get engaged and in an environment where they can get engaged without a lot of hassle, they've done a pretty good job. So they've lowered the friction here. And that's why we're seeing Tesla X outselling the BMW. Is that what I heard the other day? Just in the past 6 months? They're lowering that friction. All right. Talent. If we're going to scale, let's look at talent. Here's how we look at it. Build your talent for scale. So we've got a lot of startups in the room, early stage folks, so let's look at it from this perspective. There are several new plays in the marketplace right now where you can be a fractional executive. I just met with a group that's doing a startup on this yesterday. That is, you can hire a fractional CEO, CMO, HR that will come in for a short period of time and help you get started. Anybody using something like that now? A fractional? Yeah. Can you tell me about your experience so far?
Just started using it. It's a
Fractional CFO, yeah. We've had interim CEOs and CFOs for a long time. In fact, that's an entire industry. That's something different. It's much more expensive, and you're committed to that person for a longer period of time. A fractional CEO might come in 1 day a week and help you out. That's a good way to start, and it doesn't obligate you. Secondly, right person, right time. As you're growing, it's critical in those first steps that you get the right person in the right slot, and it's a person that can do the job. And that sounds like an obvious thing, but I see too many people really reaching quickly to put somebody in a slot without really thinking it through. You got to have the right people on board. And what do I mean by that? It means this. The more contrarians you can hire that are great team players, the better off you are. That sounds like an oxymoron, I know. The more you can hire someone that's going to confront you and challenge you every step of the way, but still be on your side, those are gems. Those are people you want on your team. Notice I said not people that are going to destroy your business or sabotage you, but legitimately be with you, but challenge your assumptions, just like you're asking your customers to challenge your assumptions. Those are the kind of people you want to be screening in to your organization. Later on, if you're an established business, can those leaders keep up with the multiples? As you go through the platform growth, 1 million, 2 million, 2 million to 5, 5 to 25, 100 to 200, can those leaders keep up with the multiples? I was in a conversation the other day with Ken Hubbard. Some of you know him as a well-known CFO here in the area. We were talking about a firm that had to jettison their CFO because the CFO could not do the job that he did at 10 million when they were at 100 million. Didn't have the skill sets, didn't have the knowledge, didn't have the vision to do it. That's something you have to watch for. So what I recommend to you, as you get started, if you're 2 million and up and above, hire one step above what you need. Hire someone that's going to be that CFO at 100 million when you're at 10 million. Hire that CEO that's going to take you to 1 billion when you're at 100 million. So hire early and hire high. Once you're established. It's going to be more expensive, but it's going to be worth it to you in the long run. All right, next. Run one person short. This is a great piece of advice I got from the former president of Nestle I used to work for when we had a lot of people around the world. Run one person short. Anybody know why I'm saying that? I'm sorry? Yeah, you're kind of pressure testing the organization, right? If you're running one short, that's going to bring up flaws and bring up gaps within your systems and within how you're running the business so that when you make that hire, you're going to get the right person to fill in that slot. Also, it forces you to stretch the business and make sure you have completely digitized what you need to digitize. If you're adding staff when you could be doing outsourcing or resourcing in a different way, then that's a better play. One person short, all right? Let's back up for a second. Since we're talking about talent, and again, I'm trying to get it all in here, but I want your opinions on this. Any other nuggets you've got as an audience, some of you ERRs that you've discovered as you're adding talent? What else have you found to be successful, either in talent or building the team? Yeah, please, Stacy.
I think it's really important to determine whether or not you want somebody who's seasoned and can just hit the ground running, or if you need to have somebody who's you can train, because it's two different elements.
Yep.
And I've had both experiences, and one has cost me a lot of money in the long run because it didn't work out. So I think it was a huge mistake, but it's also a great opportunity to learn. So I think determining, like, if you're really small and you think you need somebody who could help you out because you've got all this business and you need somebody who can, come in and help you. Sometimes what you really need is somebody who you need to train and know who can grow with your business.
Very true.
Right?
It's making that call of how much money and time you want to spend training them, right, versus getting experience. Yeah, it sometimes can do that. So that's a good call. Yeah, please.
Also, hire slow and fire fast.
Yeah, so close.
You want to make sure that you have the right culture fit on the people that you're bringing in. And if you have somebody that's not working out, you have to put them in because it can take down the whole organization.
That's so true. The best piece of advice I ever got in my career was by Cameron Herold. He wrote the book Double Double. And one nugget out of this book was just that. If you've got a bad apple, take care of it now, right now. Don't let it fester. Don't let it fester more than one day and take action against it. It'll be expensive sometimes from a legal standpoint, but the longer you allow it to fester, the more it will infect your team. Great, great advice. Talent is the big trip point for scaling. If we don't have leaders that can scale with us, that can manage scale, we can't get started. All right. Cost and revenue. I'll drill into this just a little bit, but the obvious thing is that if costs are going up at the same rate as revenue, then we're not scaling. Bottom line. If we haven't leveraged software effectively to keep our costs down as revenues are going up, then we're just spinning our wheels. Now, there's some very excellent examples of where that's not the case. I just had one up on the board here, Amazon, who allowed themselves to allow costs to continue to grow as sales went up because they had a different strategy in mind. In fact, it'll show back up here in just a minute. It took Amazon years to make a profit. There's quite a few businesses like that. But that was a deliberate strategy. Most of us don't have that luxury. And by the way, I never prescribe, I've got some big names thrown up here. I never prescribe to an audience to aim to be an Apple or a Google or a Facebook. That's unrealistic. You want to have a vision and a vision for your space, but you're not going to model after a Coca-Cola has been around since 1885, which, by the way, since it's up there, started out as a patent medicine and it actually had cocaine in it. So interesting model. But they started out as patent medicine and then grew themselves through channel and bottle distributing. Cost revenue. This is a key metric you need to be watching constantly. If the operating costs are going up and they're exceeding the revenue, obviously we're not going to scale. Internally driven cash. How many of you right now are running a business where you're surviving strictly on cash flow alone? You got some business? Yeah. It's a viable strategy. One of the things we recommend to a lot of the clients we work with is debt is your last option. Sometimes that's not realistic for a lot of us, but we're trying to make that the last option for all the right reasons. One is we don't want to dilute the ownership that we have. We don't want the obligation. Debt can be insidious. Speaking of Tesla, you look at the debt situation they have. Look at Toys R Us, who was burdened by debt, went out of business, among other things. Same thing happened with Lowe's and several other big box retailers. The idea here, though, is ultimately cash flow is king. If we can create this business that will generate enough cash to fund operations as we scale, that's the Holy Grail. That's the Holy Grail. If we're going to get into the debt markets, here's what we need to be thinking about, and thinking about early. I'm talking about pre-million, 1 million in revenue. Thinking about different capital options, what we call a capital stack. So you think about this, the monies you're going to need that say are below 100,000, a sourcing for that between 100,000, 500,000, and above 500,000 as you go through your different rounds. You're going to be starting to acquire these relationships with different capital providers of different types, whether it be IBs, private equity, VCs, whatever it may be, and establishing a relationship with them early and getting to know your business model early. Make sense? CapStack, full disclosure, I sit on the board of this company. That's a socialization of capital if you go to capstack.com, and you'll see the requesters of money with the providers right there, and socialization of that process now. That's something you want to start early so that you have, again, these various resources at hand. I'm seeing too many startups wait till the last minute to go out and ask for money. They want to prove the concept. They want to get way down the road before they start establishing their relationships. Start it now. Execution and metrics. All right. John Doerr. Everybody know who John Doerr, the famous venture capitalist up in the Bay Area. He went in to see Larry and Sergey when they were starting Google and had a conversation with them, and he said, guys, where do you want to be in 3 years? And they said, we want to be at 10 billion in sales. Oh, excuse me. They said, we want to be at 10 billion. We want to be at 10 billion. And John Doerr thought they were talking about market cap, the multiple off of the web play, right? And they said, no, no, no. We want to be at 10 billion in sales, in revenue. And right then, Doerr knew that they were committed, they had the vision, and they had the obligation to go that route. And the thing that was driving them was that Sergey had laid out what do we call these OKRs. By the way, this is the book that just came out that John Doerr just published. It's a great read. Google is relentless at creating these OKRs as they scale the business, always have been, no matter what part of the business it is. And looking at these key objectives on a daily basis, on a weekly basis, at the individual and team levels. And it's an amazing thing to watch. They've got everything down to a measurement and a science. We were following another company that's in that field too, Apartments.com, owned by CoStar out of Philadelphia. They are relentless on these OKRs to the point where they drive their talent crazy, but that's another story. These, as you're establishing your scale, attach these key metrics to it. If we drill into this just a little bit, some of those key metrics might look like this. And I'm a little biased because these are the metrics I look at. The sales per employee. If you've got a business, sales per employee, say it's $100,000 per employee per year. I'm looking at that business and I'm saying that's not sustainable. That's not scalable. If you've got a projection that the sales per employee are going to reach $1 million or more annually, per employee now, then I'm saying you've got some real potential to scale that business. You've got an opportunity. The ratio below that just doesn't work out. Now, I know I'm speaking generally because some sectors, hospitality, it's not possible. You've got a heavy labor usage. However, again, hospitality is looking to reduce that labor percentage. How many of you checked into a hotel recently where you didn't even get see a clerk? You just went straight in, right? You went to your app, you got the code for your room, and you went straight on in. This metric, sales per employee, is one of the most important in my mind that you need to look at if you're going to scale. Secondly, customer growth milestones. That first million, that first second million in customer growth. Have you clearly identified those steps to your business each point of the way? What does it look like? What specific growth? What are the metrics that you're looking at? David, you're here. I mean, you did a lot of work with J&J, and what was your approach to this customer milestone?
Well, like a lot of what you said, you don't look at linear growth. You try to look at the multiples or, if possible, exponential growth. And you've got to be able to identify the drivers, the value proposition drivers that are actually going to drive the sales per customer. Yeah. At a rate set in very specific time frames. It's the OKR.
Yeah, it's another OKR. What we're looking for in customer growth, as well as other kind of operational considerations, are early warning signals. Early warning signals. So if you could set those to say, look, we're off target, but we know we're going to be off target 6 months in advance, not the day you close the books. If you can set those early warning targets, then you've got a greater knowledge. So we're working with a lot of firms who work with databases and AI. And so they're able to tell us early on the customer buying picture. Changes in behavior, changes in markets, change in geography, so we can start to read that earlier. The faster we can get those early warning signals, the better. Viable innovations. So scale model map at the value proposition. This is not a static piece of the map. The value proposition is constantly changing. And if it's not constantly changing, we're not going to be able to scale. So what are we doing about continuously innovating our model, and how are we tracking those innovations? How many of you started out your business one way and wound up somewhere else? Yeah. The best example I know of is Instagram. Instagram was incubated by 3 people with $250,000 in seed money from Sand Hill. And Instagram started, and 3 months into it, they pivoted completely away from their value proposition. I mean, a complete pivot. And with that pivot, then they went on to sell to Facebook within 18 months for $750 million. So that idea that you can't just latch on to one idea and not let it change, you've got to have that in mind. You've got to be flexible and challenge yourself on that. As we're executing, these are the fundamentals of execution. If you've ever read anything by Larry Bosty, who I used to work with, the great book on execution, but here are the key elements. One is, these are the time-proven elements of leadership. If everybody's not on the same page, you're not going to get anywhere. We were down with a telecommunications company in Carlsbad, who won't be named. We keep a lot of these people secret for a good reason. 8-person leadership team of this telecommunication company. And we said to the CEO, is your team aligned with you about your vision and where you're going? He said, of course. So then we did the McKinsey type interview. We went to all 8 people, 1-hour interview over the next week. Every one of the 8 people had a different perspective on the purpose, vision, and goals of the company. Every single one of them. Complete misalignment. So you can imagine where that's going. Secondly, stakeholders aligned. Is your board of directors, is your advisory board in alignment with you? Are your key customers, are your strategic partners and alliances in alignment with you? You've got to test that on a regular basis. I don't care how you do it, a survey, sit down, talk, whatever's practical. Roles and accountability. As we're executing, is everybody clear on what they're doing? Are they held accountable for it? People don't like to be held accountable for it. So you're going to have to find a way of making them accountable, clarify that, have metrics against each person, right, Duke, and keep them on track. Core values and purpose, we just talked about that last week at the Lunch and Learn with another group. That's a fundamental start. You've got to have a purpose that people can follow you up the hill. And it's got to be a clear one that they can internalize. The biggest problem we see with a lot of core values and purposes are that they wind up on the lobby. You walk into a company and there it is. Here are our value systems. In fact, if you go to a lot of the employees, they'll pull it out of their wallet and they'll have a laminated card with the values and purpose on it. That's not the way to get values and purpose ingrained in an organization. It's got to be something you can internalize, get emotional about. Finally, plans. This is super critical. Plans and performance are visible to everybody. If the only person that sees the metrics is the CFO, we're a losing proposition. We really haven't engaged people. They don't know where they're at. They want to know where they're at. Good, bad, and different, they want to know what the metrics are. So find a way of doing it. I'm going to share an example of that in just a second. Back to the scale map. Holistic view of your model. All these components have to be examined. I'm only touching on 3 or 4, but I want to kind of give you a sense of where we're going. Leap growth. Here are your big ones. 1 to 2 million, the toughest leap you'll ever make. What's the biggest challenge there? Validation of your value proposition. Are you getting the response from investors, the market, customer base, channels? That's your big challenge, 1 to 2 million. Number 2, it's not cash, it's validation. Number 2, going from 5 to 20, talent. Getting the right talent. Again, hiring a $5 million person, hiring a $5 million person that can take you forward when you're at 5 million. Talent. Number 3, 25 million to 100 million, the leap growth. Infrastructure. Your whole infrastructure's got to be completely in sync, growable, integrated. Each one of these move in sync with each other as you're growing. Absolutely critical, infrastructure. I was with the CEO of Mophie the other day. I don't know if she's here, Shauna's here. Shauna said this, she grew Mophie to $100 million in sales and sold it. And I said, what did you come away with from that sale? She said, look, I don't care about the brand. The brand doesn't matter. Infrastructure is king. If once I've got my infrastructure, all those elements working, I can apply any brand I want to it, any brand I want, and be successful. So critical we get all these pieces in place. 100 million to 500 million. This is where inorganic growth comes in. So a couple of you mentioned new channel partners, growing it that way, taking on different real estate, different markets. This will be a way to accelerate once you've got that point. I'm not saying you can't acquire early in your stage, but typically the big leaps are done at the 100 million to 500 million. Those strategic alliances. Mindset. Your mindset, again, this deck will be available to you later, but the biggest thing I can do is give you on a mindset is that go beyond what your common sense would tell you if you're really going to scale the business and grow it. So if you're at 10 million and you want to be thinking about 100 million, why not? Go for it. If common sense, if the naysayers are saying you can't do it, go for it. So I'm saying it takes a little bit of crazy to make these leap ropes, but it's useful to do it. It's worth it. Your scale accelerators that will get you to leap growth. Number one, creating internal disruption teams. Number two, the well-timed pivot. We talked about that. New markets. Number three, strategic alliances and partners and mentoring. So let's look at this. Number one, Fred Thiel, former chairman of local.com. Some of you know Fred. Fred set up a disruption team inside local.com. Their charter was to disrupt his business. They came in every day attempting to put him out of business. That was their charter. So you'd have 5, 6 people go in a conference room every day and challenge him. Disruption teams that will help you identify where you can scale. Number two, channel expansion. I forgot who brought this up. This is a map of Golden State Foods. If you're familiar with Golden State Foods, they're the second largest privately held company here in Orange County. Yes, sir. You have a quick question?
You mentioned about to hire team.
Yes.
Just to disrupt your business, rather than, since we already have from the beginning start of the digital and transformation technology and the market insight on client profile and end user
Right.
needs, and then we have a total insight on the market value and the market shares, and then for that we focus, and then we say we're gonna do a flexible strategy where we can do risk management.
Exactly.
Or market opportunities where we see other makers or other competitors that are failing to satisfy the need of that market.
That's right.
So my question is, how can I differentiate between yes, it's all under one, which is disruptive innovation, but it's just like how can you help me make a difference between the two, like the Amazon model, where it's like big space
Oh, yeah.
and very little income versus from their, as you mentioned, from their early years, it took them a lot of years to make any profit, but
Right.
by the time, because of the space, and then also because of both spaces, one is space in
Yeah.
cyberspace, and space to and the technology to manage these things, and then you give us the example of like where others they cannot make things, and then we go and we keep what is not satisfied for that. Kristen mentioned something about mini mills, like the
Yeah.
example of the steel. And
Well, let me.
when companies they
Right. Well, let me do this because you've got a lot packaged in your question. But what I'd like to do, because let me go through the rest, and this may answer your question about the differentiation. Okay. Channel expansion. So the history of GSF. One customer, McDonald's Corporation, for years. One customer, there's a handshake in that map. That's the handshake between Bill Moore and Ray Kroc in 1947. That was their customer up until just about 7 years ago. They scaled that business with McDonald's as far as they could go. Then they hit a wall. Then they took a pivot about 6 or 7 years ago and said to themselves, look, we've got the infrastructure, we've got the trucks, the distribution plants, we've got the processing plants. Why don't we go after the other people in the fast casual and the fast food markets, the one-stop shops? They worked out their arrangement with McDonald's. Now they have 220, not just one, 220 customers, and they're at 7.5 billion. They were able to scale off their existing infrastructure, their markets, and leverage those channels. It's an amazing story. Another one, Mimi's Cafe. This one is a case of shifting your market space. This may get to your question about differentiation. Mimi's Cafe was in more of a formal restaurant setting for years and losing customers. So they decided to become a fast casual play if they were going to scale beyond what they were at. That required them to get on the clock. So this is a map of their restaurant. They put the entire restaurant on an OKR called a clock. It meant that you as the customer, if you came into a Mimi's Cafe, would get served within 34 minutes, not 54, which was their average before the intervention. So a complete shift in the business model to be time-based, fast casual versus formal. That's the way they rescaled it. They put the servers on a clock, everything else. Whole story behind this. Next, here's what I'm going to leave you with, and I'll take any final questions. And by the way, I'll stick around after the meeting if you have questions. Number one, you've got 3 things to think about if you're going to scale the business: passion, persistence, and peripheral vision. Number 1 is passion. Somebody brought it up earlier. You can't be Amazon, you can't be Google, nor do you want to be. You can't be Steve Jobs. It's your vision. This is a great quote by Larry Ellison. It's got to be your vision, your approach to business, how you're going to scale it. Number 2, never give up. Don't listen to the naysayers. Keep persevering. Keep pushing forward. Too many people fall by the wayside. Number 3, peripheral vision. The biggest risk to scale is being blindsided by a competitor that outscales you. We see this happening all the time. The yellow cab example in Uber is a famous one, but it's happening everywhere right now. It's because what happens is the larger we get, the more myopic we get. The larger we get, the more myopic we get. We start looking internally. We start getting excited about ourselves and our success. We start building enormous headquarters. I always say short the stock if you see somebody building a fancy headquarter because they become too internally focused. Seriously. It's not true in all cases, but most cases. Peripheral vision, looking behind you, not in front of you, not in your industry, but other industries that may come in and get you from the side. Here's where we go from here. Right now, September 7th. September 7th. You've got an opportunity. You've got a few days before the end of the year to take your team or yourself, if you're an individual, off-site, relook at that value proposition from these 4 lenses. This is Blue Ocean strategy. Number 1, what can you take out of your model, eliminate completely, that's not necessary, that will stand in your way of scaling? Number 2, what can you raise that will differentiate you in the market from your competition, that will clearly set you apart? Number 3, what can you reduce? Not eliminate, big difference here. What can you reduce that will reduce cost, time, people, that doesn't add real value to the proposition? And finally, what can you create that will create that unique differentiation, more efficiency to your customer, greater value proposition to your customer? What can you create? If you answer those 4 questions between now and December 31st effectively, then you're on your way to a very successful 2019, whether the economy goes up or down. But I encourage you to do this now. Don't wait. I go back, sometimes I feel like I'm talking to myself. You'll talk to these executives, said, have you had your strategic planning session? They said, of course. Then we'll go back to their team and they say, no, we haven't had a strategic planning session in 4 years. We don't know where we're at. Today's velocity of markets requires that you look at this if you're going to scale and look at it now. All right. A couple of things I'll just suggest to you. A lot of the stuff and research we do are based on books like The Platform Scale. I found that one effective. As I mentioned, I found Cameron Harrell's stuff good, Double Double. The Medici effect, where the collision of industries produces new ideas. That's a great one. And one of my partners that wrote The Not Obvious Thinking, he'll be here to talk at the Lunch Learn in about a month. Those types of things are worth to look at, and John Doerr's book that just came out on OKRs. I strongly suggest you look at that right now. We found that very invaluable. All right, with that, we've covered a lot of ground. Any questions? Again, we'll be around to answer questions. This deck, Eric, this is recorded, so it'll be up on the site later in the week, next week rather. Questions, quick questions? Yes, sir.
What are your thoughts on going after scale before a specific business model has been determined?
What do you do about going after scale before the business model? Here. Yeah, here, just grab it on there one more time.
I was just wondering what your thoughts are on going after scale before you've determined a specific business model.
Well, you're kind of answering it. It's a great question. And I do encourage you to look at that because as you remember the question I asked about scale, go after a business that hasn't been scaled or is not scaling effectively? That's a very legitimate strategy. To look at something, if you think it's got the potential to scale, if it's a space that hasn't been tapped or it's not been tapped effectively, certainly, and then build a business model from there. That's happened time and time again. I mean, part of it, this is a little behind the scenes. Elon Musk, that's why he keeps creating all these businesses. He saw the automobile industry, saw something that wasn't being satisfied, said, I can do that better, and stepped into it and scaled it. Does that help you?
Yeah.
Okay. Other questions?
Yeah, I have a question for you. So, since the topic is disruptive, technologies are disrupting an industry, and then you also brought up keeping your value proposition your own, and also you threw out non-obvious thinking. And when you're starting up, and I take it a lot of people here, including ourselves, we're startups, and you're presenting this new idea and something that's not obvious to others, and you're trying to disrupt something. How do you keep, or what is your strategy on, or what's your advice on keeping your value proposition yours while presenting something to stakeholders who may invest money in you and then also think that they have a value proposition that you're not seeing and they're shifting your value proposition? So the balance between being teachable and coachable versus, well, we have a unique perspective that nobody's done before. Should we hold on to that and find the right person to see our vision?
That's such a great question because it gets to the heart of this, the middle of this whole chart, the whole scalability chart, and that is no value proposition is forever. I haven't seen one yet that withholds this test of time. Some last a year, some last a week, because you want that. To your point, you want that investor input, you want that market input, you want that team input to how you're going to shift various parts of it. You certainly want to IP. Don't get me wrong, if you locked onto something, you want to protect that IP. We're not talking about IP, that's a different story. But you do want to have a flexibility where you can shape and modify that. Does that help? Yeah. Yeah, sure. Other questions, or we need to wrap because we're 3 over. Yes, sir.
Okay, thank you, sir. So my question is how to figure out the value we can deliver to our customer clearly and quickly.
How to get it out to the customer?
The value we can deliver to our customer.
How do you get it? You mean how do you communicate that?
How to figure out the value we can deliver to our customer quickly and clearly.
Well, it's kind of a marketing question, but it also gets to something I was talking about earlier, that this is, and Jeff Bezos' quote, it's not always about the marketing. It's about how strong you're communicating that value to the customer such that they come to you, they find you. And if your value is strong enough, they will find you, not via marketing, but through other means, either virally or some other way that they picked it up on market. That's the fastest way we found.
Okay, that means we must build our own value first, right? Okay, thank you, sir.
Yeah, you triggered something else. Oh, look at the sidewalls for just one quick second. I'm going to wrap. Death by debt. About half those companies are gone because they could not scale. They allowed other firms elbow into their space, eat into their margins, so they're not around anymore. Or when they were scaling, they lost sight of the customer. They didn't go scale with the customer themselves.
Well, one question related with communication, because important skill. And sometimes I have the sense that the customer, it's easy to communicate the value proposition instead of talk about value proposition, talk about the benefits that we are trying to provide. And I would like to know what is the differentiation, because you put value proposition, features, and benefits. But sometimes the benefits are just a reframe or a reframe of your value proposition to make it easy to communicate.
That's a great question. It's a little bit of semantics between value and benefits. But the point I was trying to make is your first hit to the customer, the first thing they hear, first thing they see, first thing they experience, first thing they engage is around the value to them. The core value, it's resolving that pain. And then they look at, oh, here are the benefits, the list of benefits. So it's a little bit muddled there, but I want you to go to the core value of what pain you're resolving for that customer, what need are you filling, okay? We got one last question and we'll wrap.
I can talk loud. You mentioned about mindset.
Yeah.
Like uncommon thinking. How do you measure them? That's it. Like when you want to be uncommon, it's hard to measure.
Great question. How do you measure uncommon? Uncommon. When the noise around you becomes negative, the louder it becomes, the more uncommon you're becoming. The more resistance. Marshall McLuhan used to say, many enemies, much honor. And what he meant by that was he was pushing a button. He was going somewhere because he started to meet resistance. That's how you know. Just one other quick thing. This is my favorite one. Icing of a value proposition. Ice used to be delivered to people's houses. By the way, if anybody can find one of those trucks, I'll buy it immediately. That's a cool looking vehicle, isn't it? The Oscar Mayer Coolerator. They delivered ice to your door. And of course, what happened? Refrigeration came along, and that entire industry, which had been around for 150 years, disappeared almost overnight. So your value proposition, always be aware of that blind side. That's going to get you every time. The other one, famous one is, Facebook used to be MySpace. That is, MySpace used to think it was Facebook, but it used a portal strategy as opposed to a broader content-based strategy and boxed themselves in. I found that interesting. MySpace is now ranked number 4,000. Much to the chagrin of David Murdoch, who paid $500 million for them a few years ago. Now it's worth zero. Okay, with that, thank you all. I'll stick around. Thanks for being here. Thank you.